Welcome to this episode of Manufacturing Talk Radio. I'm Tim Grady. I'm here with my co-host Lou Weiss. Lou is the president of All Metals and Forge Group, the sponsor for Manufacturing Talk Radio. We are going to be joined shortly by Norbert Ore. Norbert is our senior correspondent on Global Surveys as he looks at the purchasing managers indexes from countries around the world. And Norbert, we're again glad you're joining us, but are they still a flock of geese or are they beginning to scatter?
Actually, they're firming up even more. So we've got a pretty good story to tell.
Looks like it. So why don't you tell it?
Okay. Well, you know, we go through this each month, and the beauty of it is that we're measuring month over month change. And so when we have months like this one, there was a good bit of change, almost all positive. And we're seeing that spread around the globe. So it's a good story for the global economy as well as the US economy.
Except for Mexico.
With the exception.
You would think with all of the reshoring that some of it would be nearshoring, and are they just getting slammed with COVID so hard they're not recovering, Norbert?
I don't think there's been that much movement yet from one area moving from. We haven't moved a lot back from China. We haven't moved much down to Mexico when we said we would. So I don't think that's going on, frankly, as much as we might have seen otherwise. At the same time, I think each month it's really got to stand on its own going forward. We got a good quarter in front of us. How much longer that continues, the amount of lost trust that we have in our institutions and the things that we count on to make us different than the rest of the world.
Right.
One of the speakers that I heard recently said that Europe, when he thinks of Europe, all he thinks about is museums. When he thinks about Japan, all he thinks about is healthcare. When he thinks about China, all he thinks about is their lack of truth. And then he thinks about the United States, and as bad as we are, sometimes we're still better than everybody else.
Well, it's nice to hear. We have a slight lack of truth coming out of our government, no matter who's in power. They just kind of make it up as they go along, and the media reports it as they go along. But your numbers are pretty solid. So tell us what's going on in Europe in terms of the Purchasing Managers Index. I imagine Germany's leading the way, or maybe the UK is these days.
Well, actually, Germany is leading the way. And I've got to see if I can't open a file here. Tim.
See, Lou works on paper, so he's always got that document right there.
Well, right now is one of those.
Germany is 60.7.
I would like that. Let me play with this 1 second and see if that.
Lou,
no, that
Lou,
gives
you
me
can
two
do the color
views
commentary.
Two views of Lou, and now two views of Tim. There. Okay. Well, let me just go ahead and talk to it because I know the answers. The only European in the Eurozone countries, the only one that was failing to grow was Greece. And obviously Greece doesn't have a large manufacturing sector anyway, so not so bad. But 6 of the Eurozone countries were above 55, led by Germany, which was in the high 50s. And so Germany, the Eurozone has made a nice recovery associated with all of this. They should have expectations, as we do, that the more vaccine they get out, the more that's going to be significant for that. The UK had another good month, unless you're royalty.
Right. Unless you're Meghan Markle.
Yeah, they had a good month in the UK. After 3 softer months, so they were still decent, but a little on the soft side. So it's got the right things happening as far as the UK and the EU is concerned. They're kind of kiss and make up, I guess, along the way. So I think that's good for the rest of us. Japan, South Korea, Taiwan, all of that region did well. The numbers for China, though, are really flattened out. China always has 6% growth. It doesn't matter what the rest of the world's done or anything else. They always have 6%, which keeps them right above the midpoint of 50. And they believe that they're right. I don't trust China, and given the things that we see from them and the production, I do think they're really trying to put a footprint all around the globe. When I hear China rattling a saber against Taiwan, Taiwan is highly industrialized. Taiwan is a democracy. Taiwan is all the things that we'd like to see out of other places in Southeast Asia and so on. But we're not there at this point. So I have an affinity for Taiwan. I think it's a great country. I can't imagine China doing anything militarily against Taiwan. They're on that island, and the density is very thick population. I just can't imagine that really happening from there. So that's pretty much globally. Lou, you always like to talk about Brazil a little bit.
Yeah. And thank you for bringing that up. They're doing 58.4.
Right.
That's huge.
Right. And so it's a continuing story of recovery in Brazil. Probably will continue, given the numbers that came out of the US with manufacturing and services. There's no reason to believe that anything other than good things should happen between now and the end of the year. I was in a meeting yesterday where a lot of people talked about expectations for the stock market, talked about how they could, what investment will look like and willingness to invest. And all of those things seem just very positive. The stock market is pleased with the way things are happening right now. The only thing that bothers me is every time in the past that I have said it just doesn't get much better than this, it didn't. And, and I'm at the point where I'm about to say it just doesn't get much better.
Watch your language, Norbert.
Than this. So I'll have to put a twist tie on my tongue, I guess, Tim. make that work for me.
Well, not to be the bummer, because I'm really excited about things that are happening in our marketplace, in manufacturing, in our economy, and so on. And also politically, even though I don't want to talk politics, things seem to be getting better. However, there's a big however. And, you know, it has to do with COVID, and it has to do with the fact that we have some major nut jobs out there that have decided to open up states and cities and re-implement the COVID into our society again. And I'm real concerned. You know, my wife and I were of the age where we got our 2 shots each, but that's not the point. The point is that our lifestyles are changed, they're altered, and they're improving. But if the COVID comes back again, it's going backwards.
I had the opportunity to hear one of the foremost experts on COVID yesterday, and his take on it, and I followed his reporting for quite some time on the whole issue. His take on it is that we are so close to herd immunity that could be April.
Really? Well, I'm glad to hear that.
Yeah, and we also have had the shots, and I had the Moderna shot. Had a little bit of I had about the sweats for about 20 minutes, and that was it. That was the reaction. It was all that was there for that. So my take on it, I'm much more comfortable, it sounds like, than you are about where we're going directionally. Do we have the right things happening? And I'm convinced that we pretty well have the virus behind us. And
well, from your lips.
Yeah, let's hope so. But I've spent a lot of time looking and reading and everything, and I have certain people that I trust their judgment and what they say, because they've been right from the beginning, and they've stuck with their story, and it's proven to be true. So I'm comfortable with that. I hope I'm right. I know you hope I'm right. Seb hopes I'm right.
You bet.
But we're pretty far down the road. The big issue now is people not opening up, restaurants not opening. That's the big drag on the economy right now. One of my associates is predicting a 10% increase in GDP. And he has good logic for it. And hopefully that worries me. You know, what worries me is debt. I know in my personal dealings, if I run up debt, I just make life miserable for myself to do that. And so I choose not to do that. But we have built such a base of debt that I've heard really credible economists say, oh, that's no problem. Well, it becomes a problem if you don't pay it, if you if you let too much time elapse to where interest rates go up and you have to start paying debt, interest on higher debt. That worries me.
Norbert, are we talking about personal debt, corporate debt,
I'm talking
debt? Because
frankly,
I have my theories on that.
Yeah, I'm talking both, frankly.
Okay,
personal debt. This is not a time that you'd want to have, a lot of personal debt
right.
From that. So, but debt really bothers me from the standpoint of usually when you have to pay it off is not when you're the most well off because of it. And what we gain from it, we're going to see substantial tax increases coming. And so, you know, I've provided for my retirement. And this time last year, before the virus hit, I was pretty happy with where I was. Now I'm wondering, am I in the right place? Is it sustainable?
So let me ask you, Norbert. Our country government is into debt to the tune of $27 trillion. I have a feeling and a philosophy about that, but I'd like to hear your thoughts, and then I'll share mine, which a lot of our listeners already know, and Tim is already laughing. I do have a view of our national debt. So
right.
How do you feel about it?
Well, first thing I have to say is I feel very strongly that somebody has to pay the bill. And the way we're managing immigration, the way we're managing the alternative workforce, the way we're bringing people in, and you know, most of us would say we were fortunate to be born in the United States. Many of the people coming in right now should be more in line with saying, I hit the lottery. Because
yeah, I got into the United States.
Right. I got in at a point, obviously you can't expect when half of the people coming in don't have a high school education, they're not going to take up the brunt of that. So, but back to the focus on debt itself, it's very difficult to pay, and it's almost impossible to get the Congress, you know, to deal with that. I just don't know how you spread that debt among all of the people that are here so that you can bring in people and treat them better than we're treating ourselves at this point, and what's going on with it. So that bothers me. You know, no society, no country has ever, the only way they've ever gotten out of huge debt is inflation. And Lou, you've seen it in South America. How many times have we seen the cycle coming out of Argentina? And you know, I think at one point Argentina was, the currency was devaluing at something like 4,000% per day or some.
Yeah, yeah. Well, that's part of the joke. And I'm now up on my podium about debt. You ready?
Yeah.
It's never going to be paid off. So our Congress, they don't want to, you were right, they don't want to deal with it. They don't know how to deal with it. They're not going to deal with it. It's never going to be paid off.
No, they're going to inflate their way out of it.
Whatever works.
They're going to try. It's the $88 trillion in unfunded debt that they never talk about. That, you know, we're over 100 trillion in some BC. I recently read, Norbert, where the national debt was now $27 trillion, and that was 106% of GDP, and so we're okay. But we got a $21 trillion GDP. They must be using the new math.
Well, certain economists have told many of the politicians that the debt really doesn't matter because we owe it to ourselves.
Bingo.
But somebody's holding the paper on that. We're not.
Right.
And
right.
Somebody's got to get the check.
Yeah.
You know, it's like some people that I've been out to dinner with before.
Yeah, it's
they short arm you when it comes time to get the check. Well, the politicians are definitely short armies.
Yes, yes. Well, I think, yeah, Lou stated it right. He and I have talked about it for some time. The Congress has no idea how to deal with the debt. They don't know how to fix it. They can't tax their way out of it. They couldn't. They couldn't tax the United States people enough to get out of it. And besides, if they did, they'd spend it faster than they were paying off.
Back in debtor's prison once again.
Yeah, that's right. So it'll be interesting to see how your numbers pan out in 2021 in terms of GDP. 10% growth would be impressive.
It's almost impossible.
Well, we can make it up.
That doesn't put a big dent in the debt.
Right.
You know, compared to, we're at what, 160% of GDP, our debt?
Something like.
You know, we can't run away from that, but we also can't do much about it. So that worries me more than anything. One of the things I do want to mention specifically, I'm seeing a lot of price increases. And
yes,
it's coming out of commodities. You know, now there's no doubt that Alcoa has had a tough time in the aluminum supply business and so on. And they're just coming out of that, no doubt. But at the same time, those people that have to sell aluminum products, they can't get away from including the cost of the new cost in their projects from what they're doing that. In fact, I'll tell you a little, I was talking to a group and I asked them if any of them knew what the terms PIE were. P period, I period, E period.
Right.
Do you remember that?
Of course.
Price in effect at the time of shipment. And that's why everything was quoted back in the late 70s.
That's right. That's the way we did it in those days.
Automatic. And we're almost at that point.
Yeah, no doubt.
I hear talk among suppliers that they can't get their suppliers to commit to firm prices for 30 days. So any quotes they put out, they can't get firm prices to back up the quote. And there's a whole group of consumers out there that just hasn't had to live with all of this. And so they're looking at it and saying, well, I'm not going to do that. And probably they shouldn't. But how much that is an economy killer?
Yes,
we have the wrong environment to be able to work in.
Well, we're likely to see that in steel in China. Their prices are accelerating rapidly. I think the world has consumed all of the cheap scrap they can get their hands on. I can remember, Lou, up where you are in the next town over, I think Pine Brook, there was a huge junk car lot.
No more.
The Chinese came in and bought those junk cars and shipped them to China and melted them for scrap. And that scrap is not in the U.S. anymore.
Right.
Let's start tearing out our bridges, which are probably scrappable given their condition.
Well, we'll wait till they fall.
Yeah, it's easier to collect the rubble.
Right.
Well, that's what scares me. Those are the things. Investment scares me. Are we going to create enough, leave enough money for those who have invested to have capital gains investments that they can put their money in order to sustain their ability to retire, to do those types of things. So it's a challenge from that standpoint. Short term, we should be fine. Longer term, I really have to be concerned about directionally, are we going to be able to sustain ourselves?
Well, at our ages, Norbert, long term, you need to define what long term is.
Yeah, for you, Lou, it's not 40 years. You're not going to start your next
it's not 40 years.
Yeah. Well, I have a brother-in-law who is a doctor, and he often reminds me that all the years that when you take care of yourself, all the years you add to your life come at the end.
Right.
Yeah.
Right.
Yeah, you don't get the benefit now. Well, Norbert, we appreciate you being with us. It's actually been a very enjoyable discussion with you. So I'm looking forward to the 10% GDP and the Democrats paying down the debt so that we're sitting at $5 trillion in the hole or something like that.
Right.
But I'm not looking forward to the tax. Keep the
No
tax.
one's paying the debt.
Right.
But we'll chat again with you next month, Norbert. Thanks for joining us.
Okay, thanks. Appreciate it. Have a great weekend, guys.
Yeah, you too.
All right.
Stay healthy.
And we've been speaking with Norbert Ore, who's our senior correspondent for the Global Purchasing Managers Indexes around the world. He does an excellent survey to give us a read. And if you are a manufacturer and you want to get that report, you need to get a hold of us and we'll get your name to Norbert Ore so that he can add you to the respondent list. You get 2 great reports that come out of it. And while you're on the web, visit all of our podcasts. You can find them at jacketmediaco.com. You can also find us on C-Suite, that's C-Suite TV or C-Suite Podcast Radio Network. And as always, thank you for joining us on this episode of Manufacturing Talk Radio.